Hey everyone, welcome back to Corporate Decoder, the place where we unlock the secrets buried in financial filings so you don't have to. And today we are diving into the abrdn Platinum ETF Trust's latest report. It's a quarterly check-in, and let's just say Platinum has been quite the roller coaster. So what are we looking at here? It's essentially a snapshot of the Trust's financial health at the end of September 2025. Think of it like a checkup for a specialized investment fund. This report is important because it tells us how the managers are steering this platinum-focused ETF. The big story here centers around platinum, a precious metal that has seen quite a bit of price action. The abrdn Platinum ETF Trust, or PPLT as it's known on the stock market, is designed to track the price of physical platinum. So when platinum goes up, this ETF generally goes up, and when it goes down, well, you get the idea. The key is to understand how much platinum they actually have, how much it's worth, and what it costs them to hold it. Let's jump right into the heart of the matter, the financial statements, and see what's been happening. First up, the statements of assets and liabilities. This is where we see what the trust owns and what it owes as of the 30th of September 2025, and also a look back at the end of 2024. On the asset side, the main player is investments in platinum. At the end of September 2025, the trust held about $1.9 billion worth of platinum. That's a huge chunk of change. Just to put that in perspective, at the end of 2024, they had around $1 billion in platinum, so a significant increase in their platinum holdings. Now, this cost figure is interesting. It shows how much they paid for the platinum. While the fair value or market value went up significantly, the cost of acquiring that platinum also increased. This tells us they were actively buying more platinum throughout the period. Platinum receivable, which basically means platinum they are due to receive for created shares, also shows up here, which is a small but noteworthy asset. On the liabilities side, the main item is fees payable to the sponsor. This is basically their operating expense for the 30th of September 2025. It was about $923,000, up from $519,000 a year earlier. This increase makes sense given the larger amount of platinum they are managing. So when you tally it all up, the net assets swelled from just over $1 billion at the end of 2024 to nearly $2 billion by the end of September 2025. This jump is directly linked to the rise in platinum prices and the trust acquiring more of it. Next, the schedules of investments. This table breaks down where their assets are. Unsurprisingly, it's all about the platinum. At the 30th of September 2025, they held over 1.2 million ounces of platinum, valued at almost $1.94 billion. This represents a staggering 98.95% of their net assets. That means pretty much all their money is tied up in this one commodity. For comparison, at the end of 2024, they had just over 1.1 million ounces, valued at about $1.02 billion. Now let us look at the statements of operations, which shows how the trust performed financially over a period. We are looking at the 3-month and 9-month periods ending the 30th of September 2025, compared to the same periods in 2024. The main expense is the sponsor's fee. For the 3 months ended the 30th of September 2025, this fee was about $2.5 million, up from $1.5 million in the same period of 2024. For the 9-month period, it was about $5.9 million, an increase from $4.4 million in the prior year. This fee is essentially the cost of managing the trust and its platinum holdings. Because the trust's primary activity is holding platinum, it doesn't generate much investment income in the traditional sense, hence the net investment loss. This loss is primarily the sponsor's fee. But here is where things get exciting. The real profit or loss comes from changes in the value of the platinum itself. For the 3 months ended the 30th of September 2025, the trust saw a massive gain of over $210 million from the change in unrealized value of its platinum. For the 9-month period, this gain was even larger, over $702 million. This shows the dramatic rise in platinum prices during this period. This impressive growth in platinum value, combined with a smaller realized gain from platinum distributed for redemptions, led to a substantial increase in net assets of over $259 million for the quarter and over $746 million for the 9 months. The statements of changes in net assets really paint a picture of the activity. We can see the impact of new money coming in through creations and money going out through redemptions. For the 3 months ended the 30th of September 2025, there were substantial creations totaling over $269 million and redemptions of about $188 million. For the 9-month period, creations were even higher at over $467 million, with redemptions around $274 million. This activity reflects investors buying into and selling out of the ETF. largely driven by platinum price movements. The financial highlights section provides a per share view, which is very helpful for individual investors. Looking at the 9 months ended the 30th of September 2025, the net asset value per share started the year at about $83.52. By the end of the period, it had jumped to $142.91. That is a massive increase, reflecting the strong performance of Platinum. Interestingly, the total return for this period was over 71%. This means if you had invested in the ETF at the start of the year, your investment would have grown by more than 71% by the end of September 2025. This is a phenomenal return in a short period. For the 3-month period alone, the total return was over 16%. The expense ratio is kept at a consistent 0.60%. This means that for every dollar invested, 0.60 cents go towards managing the fund. This is a standard fee for an ETF of this type. Digging into the notes, we learn that the abrdn Platinum ETF Trust is a trust set up in New York. Its purpose is simple: to hold physical platinum and issue shares that reflect its value. The sponsor, abrdn ETF Sponsor LLC, is the main player managing the fund. The way they value the platinum is important. They use the London Bullion Market Association, or LBMA Platinum Price PM. If that price isn't available, they use the AM price or the most recent available price. This ensures a consistent and transparent valuation. The trust classifies its platinum as a level 1 asset. This means its fair value is determined by unadjusted quoted prices in active markets. Since platinum is a globally traded commodity with readily available prices, this classification makes sense and indicates a high degree of certainty in its valuation. Essentially, they are not relying on complex models with a lot of guesswork. This section explains how investors actually get shares. Individual investors can't just buy shares directly from the trust. Instead, authorized participants, usually large financial institutions, create or redeem shares in blocks called baskets. They exchange platinum for shares or vice versa. This mechanism helps keep the ETF's price close to the value of the underlying platinum. Moving on to management's discussion and analysis, this is where the company management gives their perspective. They confirm that platinum has seen significant price appreciation, which is the primary driver of the trust's performance. They also highlight the creation and redemption activity, which you saw in the statements. For the quarter, they note a significant increase in net asset value driven by platinum price rises, and an increase in outstanding shares due to creations outnumbering redemptions. It's clear the market was bullish on platinum during this period. For the 9-month period, the story is similar, with a substantial increase in NAV driven by platinum's performance and continued creation activity. In terms of liquidity, the trust doesn't hold much cash. Its primary source of fluidity is the platinum itself, which it can sell if absolutely necessary to cover expenses, although the sponsor actually shoulders most of the costs. This section confirms that the trust is exposed to market risk primarily through the price of platinum. They do not engage in foreign currency transactions or use derivative instruments, so their risk is highly concentrated in the single commodity they hold. As for controls and procedures, the management of the sponsor has reviewed the trust's internal controls and found them to be effective in ensuring accurate financial reporting. This is standard for these types of filings, aiming to reassure investors about the integrity of the financial information. Interestingly, there have been no material changes to the risk factors previously disclosed. This means the fundamental risks associated with investing in platinum, such as price volatility and supply and demand dynamics, remain the primary concerns for this trust. Finally, the exhibits section lists various certifications and the financial statements formatted for electronic filing. This is largely procedural. So what is my take on all this? The abrdn Platinum ETF Trust, or PPLT, had an absolutely stellar performance in the 9 months leading up to September 2025. Their net asset value and net asset value per S-Hair saw massive gains, almost entirely driven by the sharp increase in the price of platinum. They are heavily concentrated, with nearly 99% of their assets in platinum. This concentration magnifies both potential gains and losses for investors. This means if you believe platinum prices will continue to rise, PPLT could be an attractive way to get exposure. However, the flip side is that if platinum prices fall, this ETF will likely experience significant declines, as they have no other assets to cushion the blow. The expense ratio is modest and the operations are straightforward due to the singular focus on holding physical platinum. The main risk, as clearly stated, is the price volatility of platinum itself. Factors like global supply and demand, industrial usage, and investor sentiment can cause wild swings. The trust is doing exactly what it is supposed to do, which is track platinum prices. The management seems competent in that regard, with no reported issues in controls or procedures. In conclusion, abrdn Platinum ETF Trust delivered exceptional returns for the period due to a strong commodity market. It's a pure play on platinum. Investors need to be aware of the inherent risks of commodity price fluctuations and understand that their investment success will be almost entirely tied to the price of this single precious metal. If you are looking for diversification beyond platinum, this is not the ETF for you. But if you want direct exposure to platinum's movements, it has performed admirably. Alright, that is our breakdown of abrdn Platinum ETF Trust's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.